SPACs and redemption rights explained simply. The popularity of the Special Purpose Acquisition Company, or SPAC, has skyrocketed in recent months not only in the US, but also in Europe. Investors are usually offered the opportunity to sell the shares they buy during the IPO back to the SPAC in the context of creating a business combination, BC. So a SPAC IPO entails investors putting their capital into a listed company that does not actually have commercial pursuits. So de-SPAC proceedings take place between the signing of the final merger agreement between the SPAC and the target company and the listing on an exchange or medium. In the context of their investment in the SPAC, the investors receive a combination of shares and warrants, rights to shares, which are often bundled in units. In the first weeks following the IPO, these units can be traded as such, but afterwards they are unbundled and are traded on the stock exchange separately as shares and warrants. Conversely, with a relatively small investment consisting of a combination of shares and warrants, they can acquire a substantial participating interest in the SPAC once a successful business combination is created. This ensures that investors will for all intents and purposes get their investment back if no business combination is formed and the SPAC is liquidated. If a business combination is formed, the amount on the escrow account will accrue to the SPAC and to any shareholders that exercise their redemption right. In the context of the business combination, the investors are offered the opportunity to exercise their redemption right. Redemption rights are generally not granted to the incorporators, sponsors or management of a SPAC. The right relates to ordinary shares, but largely not to warrants. Upon shareholders exercising their redemption rights, the SPAC will have to repurchase the relevant shares. The prospects of frustrating a business combination by activist shareholders is one major reason for broadening the redemption right. As of September 19, 2021, some of the SPAC-related stocks include TMC, IRNT, OPAD, SPEAR and EFTR. According to TheStreet.com, there are over 440 SPACs out there that will try their best to bring a deal to the market. According to Bloomberg, these redemptions arise when a SPAC's share price falls below $10, in most cases implying that 90% or more shareholders have cashed out. The redemption right gives investors in a SPAC the opportunity to exit the SPAC in the context of a business combination. These redemptions have consequently led to stocks to soar, especially in the case of IronNet Incorporated. 92% of its SPAC shareholders asked for their money back, meaning they redeemed. In a good number of cases, the SPAC companies end up with less money than was expected, as well as far less shares available for trade, which is termed a low float. Given this low float, the fact that the stock may have dropped below $10 and possibly into penny stock territory and optionable, it means that these stocks will soar once investors pounce on it.